Big opportunities in life have to be seized. We don't do very many things, but when we get the chance to do something that's right and big, we've got to do it.
You don't need millions or billions to start investing in dividends. With just $300, you can dive into the world of dividend stocks. And I'm here to introduce you to some great options, only by following the advice of the gifted investor Warren Buffett. But before we get started on Buffett's best dividends to buy in 2023, make sure to like this video and click on the subscribe button. First up, we've got Occidental Petroleum, and it holds a special place in Buffett's portfolio. Rather than chasing after the highest yields, he focuses on companies with solid business models that are poised for long-term growth. Why? Because he believes in creating value for every dollar retained. Occidental Petroleum may not have the flashiest dividend yield at 1.2%, but there's a solid reason behind Buffett's bet on it. As inflation drives up commodity prices, energy firms like Occidental see their revenues and profits rise. That's good news for dividend-hungry investors. Plus, with the stability of oil prices, Occidental Petroleum's outlook looks promising. Starting your portfolio with just $300 in his company is a smart move, following in the footsteps of the Oracle of Omaha himself. Next up, we've got the tested and proven choice, American Express. Buffett advises against unnecessary risks, especially when it comes to losing your hard-earned money. That's why he often goes for tried-and-true stocks like American Express. While its current dividend yield of 1.4% might not seem sky-high, it's significantly better than the 0.5% yield offered by Apple. American Express has weathered the pandemic storm and is picking up speed and profitability. Its core customer base consists of higher-income earners who tend to stay resilient even in tough economic times. Investing in American Express means not only securing your dividends, but also expecting them to grow in the future. It's a solid choice for your portfolio diversification, and with just $300, you can get in on the action. Now let's talk about Louisiana Pacific LP. At the end of 2022, Buffett decided to buy up more shares of Louisiana Pacific, a company that specializes in making building materials in Tennessee. Now, you might be wondering, why LP? Well, if you've been paying attention to Buffett's investment style, you'd probably guessed that there's something valuable hidden in LP's dividend stocks. Currently, LP offers a 1.6% dividend yield, which is a pretty good deal. But what's even more exciting is the potential for growth in the future. You see, as the world gets back to building new homes and multi-family projects after the pandemic, LP is in a prime position for success. The outlook for LP in 2023 and beyond is looking pretty promising. What's reassuring is that LP has a track record of consistently paying out high dividends to its investors.
The answer is I do believe in dividends in a great many situations, including many of the ones companies in which we own stock.
If you're convinced that Louisiana Pacific is a golden opportunity for dividend investments, maybe it's time to follow Buffett and start investing $300 each month. It could turn out to be a pretty wise move. This next one's a pretty safe option too if you're not someone who likes taking risks. HP. HP might not have been in Berkshire's portfolio for long, but it's quickly become one of their largest investments. With a market value of $29.2 billion and a 3.5% dividend yield, HP is a solid choice. Buffett's influence boosted HP's share price by 15%, showing the power of his investments. If you're looking for a secure stock, HP could be the answer, provided you have the patience. The company's consistent dividend payouts and strong valuation make it an attractive option for those following in Buffett's footsteps. Speaking of consistent payouts and strong valuations, who can forget about Kraft Heinz? The company boasts an impressive annual dividend yield of 4.5%, nearly 3 times the S&P average. Before diving into why this dividend stock is worth for consideration, take a moment to subscribe to our channel. We value your support. Kraft Heinz, based in Chicago, is known for iconic brands like Heinz Ketchup, Kraft Mac and Cheese, and Kool-Aid. The company has a dominant presence in the packaged food market and enjoys significant pricing power, allowing it to pass on costs to customers without losing their loyalty. Buffett's investment in Heinz in 2013 highlights his belief in this company's fit for Berkshire. While Kraft Heinz stock hasn't seen much growth in recent years, its consistent revenue and profitability make it a solid investment. High yield and quarterly payouts make this stock attractive, even if rapid growth isn't expected.
You know, we don't want to use the fact that short-term rates are 1.25% to think that something that yields us 3% or 4% is a good deal. So we sort of have a minimum threshold in our mind.
Let's move on to Chevron. Chevron has been a standout performer in the market and is expected to continue its strong performance. Warren Buffett's admiration for Chevron isn't a secret, and many other investors have followed suit. You should not miss out on this opportunity. With a dividend yield of 3.8% and a track record of 36 consecutive years of dividend payments, Chevron prioritizes rewarding its investors. The company's robust market valuation of $302 billion reflects its financial strength, reassuring investors that hefty returns are here to stay. The icing on the cake is that Chevron's shares are down in 2023, making it an excellent time to reinvest your earnings for more shares. There are solid reasons to start investing $300 in Chevron as you embark on your investment journey. But when it comes to lucrative dividends, Warren Buffett's Berkshire Hathaway owns a real gem, Coca-Cola. They acquired this multinational corporation back in 1988, and it's been paying off ever since. Currently, Coca-Cola rewards investors with a 2.9% annual dividend yield. Now, you might be thinking that's not the highest yield, but hold on, let's do some math. If you had invested just $300 a month in Coca-Cola 20 years ago, you'd be sitting on $17,400 today. That's the power of consistent dividends. In fact, Buffett and Berkshire rake in over $700 million annually in dividends from Coca-Cola.
Stock repurchases were relatively unpopular in those days. They've become quite popular now, and to the extent that I've been around a good number of them and been able to pick up on what I thought was the underlying rationale, if not the professed rationale.
Now, that really puts the value of this stock in perspective. Another stock that deserves your attention is Bank of America. Berkshire Hathaway has a substantial stake in this bank, making it their second largest holding after Apple. What makes Bank of America stand out is its 3.2% dividend yield, more than double the S&P average. But that's not all. Bank of America has robust deposits, which bodes well for its long-term profitability. Investing in this bank stock could be considered a safe bet, especially in uncertain times. However, keep in mind that when starting with a modest monthly investment of $300, choosing the right stock is crucial. Citigroup ticks the right boxes by offering a 4.5% dividend yield, which can generate solid returns over time. Citigroup's dividend yield has grown from 3.9% in 2022, and the bank has consistently paid quarterly dividends for over 3 decades. Its strength lies in its broad customer base and global reach, serving around 200 million customers across 160 countries. Operating in multiple jurisdictions does come with regulatory complexities and costs, potentially impacting the bank's growth speed. However, the high and consistent payouts make Citigroup an attractive option for prospective investors. Last but not least, we've got Paramount Global. The home to some of Hollywood's biggest stars, Paramount has witnessed significant growth in its streaming platform in recent years. In 2022 alone, the company added around 10 million new subscribers, surpassing all expectations in the competitive streaming market. With increased revenue, Paramount Global rewards its investors with a 4.2% dividend yield. This company has proven to be a secure dividend stock thanks to its consistent payouts. While there was a slight dividend reduction in May 2023, it's important to consider this move in light of the previous high payments. Buffett's trust in Paramount's dividend, combined with its high yield, makes it an enticing option to invest $300 a month. However, it's worth noting the potential impact of the recent dividend cut on future growth. If you've learned more about the best dividends to invest in 2023 and want to support our channel for more great content on finance and investing, make sure to like this video and subscribe to the channel for more advice like this.